That is a major breakout for silver. It says to us that the congestion of the last year is over. We're again resuming upside. I think silver in the next 3 to 5 months is likely to be up in the $60 to $70 range.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 9th through June 16th, 2025, while supplies last. First this week, we feature 1 ounce silver maples at just $3.09 over spot. Next, backdated 1/10 ounce gold maples at just $39.99 over melt. And right now, for the lowest price we've seen in years, 90% junk silver is just $1 over spot. And finally, 1 ounce Platinum Britannia are just $79 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Michael Oliver from Momentum Structural Analysis. Back, I think, less than 2 weeks after we had you last, because the markets are moving very fast here, especially silver. Thank you so much for joining us today, Michael.
Yeah, the last 2 weeks have been important for silver. No question. Yeah.
Definitely. Well, why don't we just start there first? I know last time we were talking about silver breaking through that $35 level, but we already touched 37 here. So what is going on here?
The price action since May of last year, if one pumps up a price chart, go back to May of last year, you see silver hit 32.70. You just draw a line sideways through a year of action. We got up to 35 twice after seeing that 32.70, but basically we oscillated in wild swings either side of that 32.70 level. And in early April, we had a plunge that cleaned out anybody who was weak. They screamed and ran. Okay, got down to 27.50 in 2.5 days from 35 to 27.50. And within a few days, you're back up in the 30s again. Okay, so that shouldn't have happened, obviously. It was a bear trap, as we said it was. But when you look at price, there's this erratic behavior, and it took like getting up well over 35.5 to take out those 2 prior highs. But when you looked at momentum of price, we had a perfectly downtrending channel that you could, if it were a price chart, people would say, oh, that's a nice channel. You know, if you break out of the top of it, you're running. That breakout occurred at 34.90 a week ago. And boom, 37, okay? Last few days, we've cooled off, but not really pulled back. If you look at the closes, it's just okay. That is a major breakout for silver. It says to us that the congestion of the last year is over. We're again resuming upside for a variety of reasons. I won't go into all of them, okay? I think silver in the next 3 to 5 months is likely to be up in the $60 to $70 range. In other words, the $50 highs were phantom anyway. Because when we got up there in 1980 and 2011, it was like for a brief few days or a few hours even. You know, so it really wasn't a reality. It was just whoosh, boom, and then down. Those old highs don't mean much. To some people, they do, because they go, oh, you make an all-time new high, big deal. But in real dollar terms, those are meaningless. If we match the real dollar valuation highs of 1980 or 2011, it'd be probably $100 silver. Okay, because of the decay in the money supply and what the dollar means now versus what it did then. But anyway, right now, I think that we're about to go into a surge that lasts 3 to 5 months, and this is not the final surge. And don't make a mistake about that. This is a surge that gets us up out of here into a new reality. And I think it's likely to carry us well beyond the 50 into the 60-70 range. I can't be more precise than that right now. And I think it's going to occur in the next 3 to 5 months. And that won't be the top, but that's going to be your next major step. And I think it's going to turn a lot of heads. You know, like, what? How come I missed that? You know, why? Because you got out every time silver flinched in the last few years, you got out, and that was a mistake, something we tried to keep our subscribers from doing. Anyway, I think this is going to be something very jolting between now and this fall, later in the fourth quarter sometime.
I think when we look at silver's price action, that's not actually too unrealistic, right? Some people might think, $60 to $70 silver, that seems pie in the sky. But really, if you look back in 2011, when silver broke 30, I think it was a couple months and you were at almost $50. So these kinds of movements are normal for the silver market. I think what is hard to stomach, though, is when we see those dramatic pullbacks afterwards. So did you want to talk about that? I mean, what do you expect if we do see a huge run to $60 or $70? What kind of movements do you see afterwards?
I've been arguing this for a while, and I probably have on your show as well. We're in a different world now. We're not in the normal bull market of 80 or 2011 gold and silver. The events that are going on around the world in terms of markets, economics, monetary stuff, and now something we'd predicted months ago before Trump was even elected. We said if he were elected, it would be, at some point, it would be uncopacetic in the streets. Not that it was uncopacetic to have that outcome. It was just that what would happen would be perceived as, disturbing ultimately, and it would show itself in the streets. And I think that's just begun, but that's not a causal factor. That's just an echo effect. Big things are happening in some big markets that will further impact what the monetary metals are doing, meaning go up, but then suddenly go up more and more accelerated. And that is, there's two markets in particular we're watching. And one, I think the stock market's topping. Okay, we thought that back in late last year. And I say the same thing now. Do not trust it. If it makes a new high, don't believe it. First off, if you look within the stock market, you'll notice that your leadership is gone. NVIDIA is still up there, and it hasn't even made a new high, and Microsoft. But you go through the other big seven, and suddenly, what's going on here? I'm where I was in 2022. The leadership is fragmented. And too many sectors aren't participating in this. Too many key sectors aren't back at their highs. So don't trust it. Momentum says you made a big stumble in the first quarter of this year that can't be shrugged off. Whereas you could try to rally and even maybe make a teasing new high, maybe. The major momentum trend is now negative. Okay, now, but more important than that, the dollar. When you measure the dollar versus the euro or the yen, I mean, they're two pieces of fiat stuff, who cares? But that's what we measure when you look at the dollar index. And the dollar index made a high in 2022 up at 115. But then in 2023, it collapsed down to 100, okay? And then for 2 years, the dollar index went between 100 basically and 108, just up and down and up into 2 full years of nothing, where it really wasn't creating any waves or consequences. It was just Dalsville. A lot of volatility elsewhere, but not in that market. In March of this year, we dropped down from the upper end of the range that it had been in down to 104 area. We turned major bearish at that point, saying, okay, major bear trend is going to unfold now, not just congestion. It's going to wake up to the downside. Since then, we've dropped down into the 99, 98 area. A month or so ago, had a rally back to 101. Right now, we're back under 98 again. We broke enough stuff in March at our 104 level to say, okay, it's underway. We've got one final number that is so negative if you close below it that it says Bombay door opens, okay? And that's closing out any month this year below 98.35 to give you the precise number. Right now we're 97.90, okay? 2 weeks to go. You close below that number this month and 10-year average momentum says you've broken your backbone, not your legs and your arms. You've broken your backbone, and you're going down probably swiftly. I wouldn't be shocked by a 10, 20 point more drop pretty quickly. That will cause disturbances and wave effects in other markets, particularly foreign money that owns bonds, government bonds, or foreign money which has never more been so important in the U.S. stock market. Never before have we had such a major foreign buying of the stock market in the U.S. than the last couple of years. Not only is price sensitive to what happens in those markets, but also to the dollar. Because if you own T-bonds in dollars and the dollar drops 10%, whoa, you're not only getting hurt in the T-bonds, but you get hurt in the conversion. Same true with the S&P, for example. So I think that dollar breakage is going to have some wave effects that it hasn't had for the last 2 years because it's been fairly dormant. And that's an area that not many people are talking about because they don't know that getting to where it is now is really that important. It is. And I find it very interesting that the dollar is doing what it's doing at the same point in time that silver's resurrecting itself. It's too coincidental. Maybe it's not coincidental. Maybe it is that you're going to have fractures appearing in different markets at the same time.
So if the dollar is kind of breaking down as silver is rising, I mean, if you're saying it's not coincidental, maybe people are recognizing that the dollar is too weak and they want to find a safe haven.
Yeah, well, and other currencies really aren't the alternative either. We know that because what we debate on the dollar index is merely the relative degradation of one versus the other. They're all degrading in real value because, they pump up the money supply, increase the quantity of money, therefore you reduce its actual underlying buying power. Like, your granddad, when he built the home, was $4,000. Now it's $440,000 is the median price. Okay. What's going on? Well, it's the degradation in the money unit. The same is true with a lot of assets, stock market as well. It's not even keeping up with the degradation in the money unit. Stock market isn't. The S&P isn't. It looks great on a chart. We ran a chart in a report a week ago just for fun. The Venezuelan stock market. Okay, talk about degrading your money. We know that. We know they pump. It's paper. It's like the Weimar Republic. Okay, that stock market's just blowing off the page. I mean, you say, "Gee, I should be in that market." Yeah, you probably it buys fewer loaves of bread now than it did 3 years ago. Okay, even though it's going off it's meaningless. In other words, so sometimes when people focus on just the nominal price of something, they're missing the point. It's degrading in real value, whereas monetary metals over time hold their value. And I think there's a re-realization of that now among a lot of investors that, gold's been doing well, not just nominally, but it's been holding its real buying power. And silver has lagged. We know that. When we study the relative performance of silver to gold, we know it's at very, very low historical levels. Okay, it was under 1%. In other words, a lot of people do it the other way. We just divide an ounce of silver into gold, express the answer as a percent. Silver getting down to under 1% of the price of an ounce of gold is very low historically. You can go back and find instances of it. And by the way, whenever you did, you want to be a buyer of silver then, okay? It's now up to 1.1%. So it's gained, some in the last month or two. It's starting to reassert itself. Same is true with the gold miners. The gold miners, on a relative basis to gold, have been basing and actually firming up over since 2015. The bear low in all the metals, they've appreciated actually a bit more than gold. It's hard to believe when you look at a chart because it looks so irregular, but actually, if you'd bought GDX in December 2015, you're doing better than if you bought an ounce of gold. Okay, but they look like they're ready to now accelerate their resurrection. They're coming out of this vastly cheap hole on a relative basis to gold, and similar silver relative to gold. So not only is silver broken out of a momentum situation that says it's about to shoot up in a more dramatic way, but its spread relation to gold and the miners' spread relation to gold says the same thing. It says, we're waking up, we could jolt you in what we do over the next handful of months in terms of, wow, I wish I hadn't gotten out of my miners. Okay, I think that's where we are right now.
When it comes to silver in particular, I mean, one of the things that's really interesting is that you don't have major buyers moving into the market. It seems like it's more the common man. So do you think that's what we're seeing at the moment is the common man moving into the market?
I think there's also some smart money that has done their homework, and they look at valuations, one asset versus another, and they see that despite silver lagging gold over the last couple of years in terms of its percent gain, it's moving up. Okay, you can't deny that fact. Yes, it's irregular, 2 steps forward, 1 back, or 4 up, 3 back, that kind of thing. Whereas gold doesn't drop as much on drops. But when silver engages like this, and has done this same thing, technically speaking, back in the 79 to 80 move, and also in the 2010 to 2011 move, where silver woke up far more dramatically than gold and engaged to the upside in a startling way. It wasn't startling if you did your technicals right, but it was startling to most people who didn't expect it. And when that happens, people tend to panic into that market, chase it. And when a market is run out of sellers, basically, those who might have wanted to restrain it, okay, and they quit, and suddenly public money comes in chasing it, that's when you get the wet bar of soap phenomenon. I think that's where we are now.
And you mentioned how the stock market is potentially going to be falling more soon. I've been reading some of your commentary. It seems like, I guess I wanted to get your perspective on the stock market also as we're seeing gold and silver continue to rise.
It's, I think, delusional. It did enough long-term momentum structural trend damage coming off the 2024 highs to argue you're topping. Okay. I remember vividly back at 2000 dot-com high, which was far less of a bubble than we've got. It was primarily, the excess in that leading sector, internet. We got bearish in January 2000, said, be gone. Okay, well, it dropped into March. Looked like we were right? But then it came back up and a couple of months later made a new high. Didn't go anywhere, just made a new high, enough to say new high, okay. So it looked like we were wrong, but we held to our view that no, you did too much damage in January, February to shrug off. You've broken your leg bones, okay. It labored all during 2000, flip-flopping either side of where we said get out. But it made price chart watchers feel comfy. Because, hey, it wasn't dropping, cool. 2001, it started to fall apart. Took it a while. Similar behavior occurred in that 2007 period where you made a high early in the year and then dropped into the summer. That sort of unnerved the Fed a bit, by the way, even though they were denying that there was any mortgage problem. And they cut rates in September. You went up into October, marginally beyond prior highs, like beyond the 2000 price high, which had been 1550. And earlier in 2007, you got up to 1575. So you took out even the 2000 high at 1550, the dot-com high, by 25 points. I got 0.5%. And that was the top. So sometimes the stock market labors that way. In other words, it doesn't make its peak and then just boom, it's over. It fools you. I don't know why that is. I think it's the persistent belief structure that a lot of investors have that it always goes up. And therefore, it's hard to kill them. But once you do the initial quarterly momentum damage, in the case of NASDAQ, some annual momentum damage, it says, no, you're through. You pick the time you want to go down, but you're going down. I suspect if you're in the stock market, what you need to watch right now is not the leading Mag 7, which, as I've argued, spread-wise, haven't begun to deteriorate versus the S&P. But watch that bond market, government bond market, and watch that dollar. Because, again, a large percent of the ownership in the U.S. stock market has moved to European hands the last few years. You kick that dollar downstairs about 5 or 10 more percent, and that hits them in the gut by 5 or 10%, even if the S&P stays steady nominally. So that could be a factor in helping to destabilize the stock market, which is usually not the smartest market around anyway. Okay. But I think the central bank right now is not so much concerned about the stock market as they are in debt. Not just the government debt, but they know that certain arenas of the stock market, there is heavy debt-laden situation, commercial real estate being prominent, where they are impacted by the strangle effect of long-term debt rates, 30-year bond rates, for example, which have not relieved them in the least. Since late 2022, long-term rates have been at a choking level, and they're getting no relief. And if you drop bonds much below the low we just saw, which looks like it's being artificially defended, by the way, central bank worried about something. You get down below that level, you could get a downside spike that creates headlines. meaning an upside spike in rates, and destabilizes market arenas that the public hasn't have their eye on right now, like commercial real estate. Because if commercial real estate starts to stumble, it's the borrower. Where's the lender? The banking sector. Okay, so quit watching NVIDIA is our suggestion.
Definitely. And I know last time we had you on just, a week and a half ago, you were talking about concerns in the banking sector. Any new updates from there?
No, it's just, it's lamer than the market. And if you run a spread of the banking sector relative performance versus the S&P, go back 10, 20 years, you'll see, it really never got off the mat. It's gone up with the market, but on a relative basis, it's never resurrected itself. And over the last several days, I've noticed that even the financial sector, the broader financial sector, which includes asset managers, insurance companies, and banks, it's been pretty lame. S&P keeps going up 0.5% a day, and it's just sitting there, bup, 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 like a no heartbeat. So we're watching other sectors. And again, I would watch outside the market. Because what happens in that T-bond market, we've had decades of error. Compounded. You can't keep doing that forever and not pay dues. And, this is why Jamie Dimon is very upset, about the government bond market and the likelihood of recession. I think he's dead on, because technically I agree with what he thinks fundamentally. But watch those other markets like the dollar index. Like I said, 98.35. You close the month below there. As far as I'm concerned, the trapdoor opens. And that could create wave selling effects in the stock market. Which, everybody thinks it's only tariffs now, right? That's the only thing that matters. No, it's not. It's an excuse. And by the way, when markets top like that, the stock market, it's rarely ever the headline you're focused on. It's suddenly, something over there I didn't think about. Oh, this bank went under. What's that got to do with the internet? Okay. Same story here. There's a lot of debt-laden problems out there, not only with consumer debt, but large commercial debt. And you can't afford to hear rumbling coming from that sector due to the stranglehold of high-end, long-end rates, because it will have wave effects. Who cares about AI? You can't afford to have the ambush come from other places. And I think it's about to.
Now, getting back to the movement, you're expecting in silver here, 60 or 70 in 3 to 5 months, it sounds like. But your perspective then on the mining sector as well. I mean, I'm looking at SIL, and it seems like it's been moving dramatically already. What kind of movements could we see in the silver mining sector?
I think that you look at SIL and you'll go back a couple years in price. You made two separate highs at around the 50 level. In SIL, that we got up to 49 and change recently. Somebody sold just in front of it thinking, I'm going to make a nickel, okay? That's what they made, a nickel, okay? You get in touch 50 again, you're at a triple top, okay? Now, the old high back in 2011 was much higher, but since then, there have been two other highs. What this is a massive multi-year base, and you're approaching the upper end of the price base. Momentum's already broken out. It says you're going to go through, but prices usually lag to momentum. It's when you go through that level, just above our recent highs, that's when many price charters are going to say, oh, heck, I was wrong. It's not topping. They'll come to the same conclusion about gold, et cetera, et cetera. That something's different this time. I think it'll run, GDX and GDXJ will go take out their 2011 highs in that period of time as well, very quickly. And that's not the end of it. That's just the statement surge, okay? I think there's more to come after the next 3 to 5 months. So I'm not talking about we're making a top in 3 to 5 months. I'm saying we're going to surge in the next 3 to 5. There's a different reality out there now, too. This is a different world we're living in. We don't have a normal boom-bust cycle this time. We have a mega boom-bust cycle. And it's going to have mega consequences that can't just be printed away with the Fed panicking. Like they do every bear market. They print, and they don't stop it ultimately until it gets to where it wants to go. And this hasn't even begun. And gold will be the primary beneficiary of that, the gold and its sister and metal and the miners. Right now, if I had to make a bet where the miners will go on a relative basis, and I don't mean necessarily in the next 3 to 5 months, but it's over the next year or so, they could triple in relative value to gold. In other words, whatever gold does in the next year or so, the miners could do 3 times as much on a percent basis in terms of gain. That's my technical prediction. Now, that doesn't give you a price. It just says you want to be in the miners. Yeah, gold's the mama, but the miners are vastly under their slingshot effect right now. And when they come out of here, and we've seen some evidence of that lately in the price action of the miners. We even get some days where gold's down and they're up. That hardly ever happens, right? I think it's underway. So my emphasis would be monetary metals, but emphasis silver and the miners.
And if our viewers are interested in learning more, they can go to olivermsa.com, your momentum structural analysis website. And one of the things I love that you keep pointing out is that the momentum kind of signifies what is going to be happening for the price.
It's usually when you make a top or a bottom in any market, whether it's long-term or intermediate-term top or bottom. Usually when you look at the momentum studies of it, and I don't mean RSI and MACD, those are wet noodle indicators, but we do it structurally with bars, just like a price chart. We plot it, and you come up with a different visual picture than what you see on the price chart often. And almost always at a top or a bottom, momentum will have broken out first, and price then gets the message later. I think we're in that phase right now, where suddenly the people looking at price charts suddenly wake up. And, they chase what then is a sold-out market. And everybody wanted to sell did. And now it's a vacuum effect. I think we're there.
We'll have to continue to track this with you. Very exciting times, Michael. Thank you so much for your time today, and God bless.
Thank you, Roger. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for June 9th through June 16th, 2025, while supplies last. First this week, we feature 1-ounce silver maples at just $3.09 over spot. Next, backdated 1/10-ounce gold maples at just $39.99 over melt. And right now, for the lowest price we've seen in years, 90% junk silver is just $1 over spot. And finally, 1-ounce Platinum Britannia are just $79 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.